back to another video. I just wanted to make another video. We're gonna be making videos more consistently anyway. I'm gonna start making videos a couple times a week again, just cause I want to get back on the grind a little bit. Anyway, let's just hop right into this video, cause let me scoot up a little bit. I want to touch on some more strategy talk from building off the last video, because we gave an example of how, you could use the strategy I was talking about, basically using COT data, which is the Commitment of Traders report, which banks, institutions, certain people legally have to disclose their positions in the market, which is really useful information. If you're gonna trade, you want to know how people with big money are positioning themselves in the market. If you don't pay attention to that, you're doing yourself a very big disservice. The second thing that I think is probably second most important is the seasonality. Some type of seasonality prediction tool. And there's multiple different tools you can use on the Prime Market Terminal. They have one that helps you with that. So then third, which is also really, really important, is on Prime Market Terminal called the DXM. You can just think of it as like a retail trader index, basically just showing the position of retail traders. And on the Prime Market Terminal, they use a big provider with a lot of retail traders, and it shows that about 77% of retail traders are losing money with that provider. So with that data, you basically want to try and do the opposite of whatever they're doing. But I like to see the other two pieces fall in line first, because if that is the case, I feel like going against the retail is so much stronger with those two components checked off first. So we talked about that in the last video, so we'll kind of go over it a little bit again. But the difference this time is I wanted to show a short position in the market. Now, this wasn't a trade that I took, but this was a trade I had mapped out, and I was just looking over the weekend. So take a sip of the coffee, and let's get straight into it now that we're done with the introduction. So this pair is Canadian dollar, Swiss franc. The reason we picked this pair is because on the Prime Market Terminal, when I was looking on the weekend, I was looking for a pair that I could give as an example for a short opportunity. And when you go to the list over here, this is kind of like the default. Whenever you log in, what will pop up? It's just the default overview, and it's pretty helpful. So it gives you all the forex pairs, or I think these are all of them, but like all the majors and minors, at least. Not really any like exotics or anything like that. Unfortunately, they don't have data for like USD ZAR or USD Mexican peso or shit like that. But either way, I was looking for a short position. Canadian dollar is really weak right now, so I was looking at the CAD pairs. CAD JPY is a good one, but it's already kind of started to move really quickly because the Bank of Japan started to intervene in the market. It's a little more complicated, but won't get into all of that. But CAD CHF was a perfect example, because we can see right here the seasonality tool is showing that it's trending down. There's a steady trend downward, which is what we want to see. The DXM, which is the retail, the retail index is showing us that majority of retail is going long. So if we want to go short, we want to see the retail longing CAD CHF. The only thing is that might be against this trade is the COT. I do believe COT, both of these, I think both of them are negative, but I believe CHF is less negative than CAD. So there's less people shorting CHF than there are. Oh, maybe not. They might actually be around the same amount. Negative 21% is pretty high. Let's see. COT. If it is less, it's only a little bit because negative 21% is pretty high. So when we look at CAD, yeah, negative 26. So they're both pretty negative. CHF is a little less negative, which I would rather see it be positive, but we have the other two components that check out, and we'll look in a second why I'm still short on this pair. So let me get rid of some of these other ones. Okay, there we go. So CAD CHF. So again, when we look at the seasonality, we see it's like straight bearish. That's what we'd like to see. We go to DXM. Just look at this real quick. Closer view. 66% of people are going long. So then the final component is to look at the technical analysis. Now, in the last video, again, I was saying we want to look at from where moves are happening for our supply and demand. So this is the daily chart. So when we look at this, we can see a big move happened here. We had a little bit of stop in price, came back up, and then we continued dropping for quite a while. So when DXM is showing, CAD CHF is people are longing it. Seasonality showing short. We're not where we exactly want to be on COT, but CHF is in a better position than CAD. This to me is a high quality demand zone, and we have the fail swing that's taken out, and the trade that would have been nice, which I actually had set up before this started to go down. I just didn't take the trade because there's a lot of trades I'll look at and I'll set up something like this, but I don't actually take the trade because for one reason or another I might be looking at something else that I think is better. But genuinely, I think we could come down to here for a 1 to 3.5. I do want to get in on this trade. Hopefully, if it comes back up here, we could still take almost a 1 to 2. But that's if it comes back up. We have Canadian dollar news coming out tomorrow morning, so maybe it can give us a little fake push up, and then we can collapse back down. That would be pretty nice, but it might just tank, so we might have missed that opportunity. It is what it is. But yeah, this is a much quicker example too. I can get through it quicker because I already kind of laid the foundation in the last video. But yeah, that's essentially it. You want to wait for all these things to line up, and then when the technicals are showing it come back to these areas where it kind of consolidated and stopped up a bit, yeah, you can just get these very, very high quality zones and these very precise entries to line up with it, and you're not always going to be right, but it gives you a higher probability when you're trading in line with actual data to back up your trade thesis. and solely using the technicals to help you time the market, help you time your entry. So I'm trying to think of anything else. And this is a bit of a different approach, because when you see this going long, and everybody else is longing it, you know, you're essentially trying to catch a reversal, but when the data is showing you that it's about to reverse, that gives you the confidence and the knowledge of that this is going to be a high probability that price can reverse from here, and we want to catch those reversals because that's where the potential to make big profits is going to come from. So anyway, that's the end of this video. I hope you guys enjoyed a little more strategy talk, and thank you very much for watching. Peace.